Wall Street rebounds from last session's losses. Meta and Amazon surge on strong numbers while Apple slides as Chinese sales dip. The Nasdaq and S&P 500 surge over 1% ahead of the release of the January jobs data later today. European stocks close lower after the Bank of England holds rates steady. Stocks in the Asia-Pacific rebound this morning on a strong handover from Wall Street, while the GIFT Nifty is also indicating a higher start for the Indian market. And crude prices dip. Brent closes over 2% lower as the OPEC makes no changes to its production cuts. Investors also continue to monitor developments in the Red Sea and negotiations over a ceasefire between Israel and Hamas. And Finance Secretary TV Somanathan defends the government's revenue estimate, says it is incorrect to term it as conservative. Tax revenue from online gaming has multiplied sixfold, says Union Revenue Secretary Sanjay Malhotra. Says all online gaming companies will have to pay 28% GST going forward. In key earnings to track today, Tata Motors, which has seen strong sales from its Jaguar Land Rover business, will report third quarter numbers. Also watch for numbers from UPL and Interglobe Aviation. Good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we're tracking for you this Friday morning. That big Q, the budget is out of the way with really not much coming through there. But, for our own markets, at least the setup is looking quite positive. So the global markets have rebounded quite well after the session that we saw earlier. So you have a good handover for, coming in from Wall Street. And on the back of that, all of the Asian markets are well in the green. What's clearly doing the best this morning is the Japanese index. So that is seen a gain of over 400 points right now. You have Seng, which is up almost 2% as well. The Taiwanese index holding up with a gain of 0.3%. And whichever market you take a look at in Asia right now is definitely seeing a bit of green to begin things. So Shanghai, Straits, Kospi, all of those indices also seeing some amount of green. I do want to point out that today the move is quite good, but for the week, a lot of these Asian markets have seen pretty big cuts. So for instance, the Shanghai index is down 4% for the week. Hong Kong also down over 2% for this week. So that is what's happening across Asia. The GIFT Nifty will come up for you, and it is indicating a very, very strong start for our own markets. 150 points higher is where we're at on the implied open for our own markets. So that's what's happening across Asia. But let's also talk about the US now, because like I was mentioning, we saw a solid recovery on Wall Street following the sell-off on Wednesday after the Federal Reserve left rates unchanged. So the Dow Jones yesterday saw a move of over 360 points. The S&P 500 gained over 1%. And the tech-heavy Nasdaq composite was the outperformer. It settled with gains of around 1.5%. Of course, it's still not made up the loss that we saw on Wednesday, but it was quite a good move nonetheless. Another point to track from the U.S. markets is that bond yields slumped further. So the 10-year Treasury yield hit a one-month low yesterday as well. And in terms of cues to track from here on, it is going to be the first jobs report of the year that investors are tracking very closely. So the jobs report for the month of January is due later today. So that's about the US. But moving on and actually sticking with the US, three of the Magnificent Seven companies, Apple, Meta and Amazon, all reported earnings after market close. And shares of Meta and Amazon jumped 15% and 7% respectively. This is an after-hours trade, but Apple actually dropped over 2% lower. So how do the numbers look? We have CNBC's Bertha Coombs to really wrap all of that up for us. Bertha.
Let's start with Meta surging after its fourth quarter earnings blew past expectations, and the tech giants announced that it would start paying a dividend. Meta posting adjusted earnings of $5.33 a share versus a $4.96 estimate on $40.11 billion in revenues. That's about $1 billion above consensus. Results driven by strength at its flagship Facebook, which saw better than expected growth in daily active users to 2.11 billion in the fourth quarter, up from 2.09 billion in the prior quarter, with ad sales beating as well. Nearly 12 years after going public, the company announcing that it's now going to issue its first ever dividend of 50 cents per share. Investors seem to really like that. Meantime, Amazon also beating handily, earning $1 per share. That's 25% above consensus, while $169.96 billion was about $3.5 billion above expectations, driven by strong holiday sales. Americans are shopping, and I'm one of them. Meantime, AWS revenues at $24.2 billion were up 13%. That came in line, but it is a rebound. They had not been up year over year for a while. First quarter revenue guidance of 138 to 143.5 billion was slightly above estimates at the top end. Meantime, Apple also beating on both the top and the bottom line. Earnings of $2.18 a share was 8 cents above. 199.6 billion revenues was about 1.5 billion above. iPhone sales actually topped consensus at $69.7 billion, while Mac and iPad sales were below expectations, as were services, which came in at 23.12 billion versus 23.31 billion expectation. The big disappointment, though, were sales in Greater China, which were down nearly 13% year over year, while the rest of Asia saw sales up 6.6%. But Martin, China is a critical market for Apple, and to see that down that much is something that has given investors pause.
All right, Bertha, thanks a lot for getting us all of the highlights of those key earnings from the US. But, sticking with our global market wrap, I also want to talk you through the European market action, because they did end lower, dragged by disappointing earnings from banks and drug makers. So if you look at the French CAC index, it's down almost 70 points. You have the DAX slipping around 45 points. And the FTSE also closed with some losses, quite flat there, but just around 9 points lower there. In terms of macro cues from the region, inflation in the Eurozone eased to 2.8% in January. This is from the 2.9% which we saw in December. And if you look at the core inflation from the region, it came in at 3.3% from 3.4%, but it was above what was forecasted at 3.2%. In some more important details that we're tracking from there, and this is on the central bank action, a divided Bank of England left rates unchanged at 5.25%. Yet Governor Andrew Bailey saying that inflation is moving in the right direction, but added that the BOE does need to see more evidence that inflation is heading towards the 2% target sustainably for them to actually begin lowering rates. So that is everything that we're looking at from the Eurozone region. With that, let's talk about our own markets, how all of these cues, really translate into what we should be tracking, as well as the individual stocks. We have Nigel, Hormaz and Vivek all here with the trade setup. Guys, a very good morning to all of you. Vivek, let me come to you first. Definitely looks like the start is going to be well in the green, but take us through everything we should track.
Well, good morning, and absolutely, one day after the interim budget, most of the cues are from overnight, as well as our own markets are looking extremely positive. Like you mentioned, US markets ended much higher yesterday. Along with that, the kind of momentum seen in Meta shares is also something that, Wall Street cheered. Now, when you're talking about oil prices yesterday saw quite a bit of a dip. So Brent futures ended low by over 2.5%, now hovering around the $78.7 a barrel mark. But let's now focus on the Indian markets. What happened yesterday? Slightly volatile trading session. However, the opening gains were erased and the markets ended near the day's lowest point. Which were the pockets that outperformed? Well, it was the PSU banking stocks and the banking pack that actually outperformed in yesterday's trading session. This was aided as far as the bond yield movement was concerned. Which were the sectors that underperformed? Well, the metal pack and the pharma pack. Yesterday, the pharma pack, in fact, saw quite a bit of sell-off, and Aurobindo Pharma on the back of the CNBC TV18 newsbreak was one of the top laggards, even within the healthcare index. But remember, today, whole host of results that came post-market as yesterday, and you will see quite a bit of sharp reaction over there. So watch out for names like Emphasis, Bata, watch out for names like City Union Bank. These are the stocks, that will react quite sharply. The other one, when you're talking about today, whole host of auto sales numbers came in that will continue to trickle in, so you'll see reactions to that as well. And some important earnings today in the form of Tata Motors, UPL, Interglobe Aviation, JSW Infra. Asian markets, GIFT Nifty indicating how a strong gap up start for our markets.
Okay, Vivek, thanks a lot for getting us all of those cues. Let's also bring Hormaz in. Hormaz, like Vivek was mentioning, it could be a lot about these individual moves because there are a lot of earnings, a lot of news flow as well. So take us through the list of stocks we should track.
But the big question is what happens to Paytm today after what happened to it yesterday. And after the earnings call, after the analyst call that the management held yesterday, Vijay Shekhar Sharma said that operational changes are needed to fix the issues at hand, and that will take a few weeks. And until those issues are not fixed, that they will not be originating new loans for a couple of weeks. That is what the management commentary has said. Now, auto sales came in, as Vivek was highlighting, disappointing. Eicher Motors, the sales were under a bit of pressure, up only 2% year-on-year, and exports were down 20%. Hero MotoCorp sales were good. The total sales were up 21%, domestic sales up 18%. Exports, albeit on a lower base, were up almost 70% from last year. Indian hotels, strong numbers as well. Now, next year, the management is targeting double-digit consolidated revenue growth, and it plans to open 2+ hotels every month is what their target is. Bata's numbers were a miss. The management said that they continue to face persistent market headwinds, but their premiumization strategy continues as per plan. And some other earnings reactions today will be from stocks like Rides, Pricol, Godrej Agrovet, and Emphasis. The Panacea Biotech, where the US FDA has classified its Buddy unit as an official action indicated, which is an OAI status, which means that any pending drug approvals from that facility could be withheld by the regulator till the issues are resolved. And Mahanagar Gas has completed its first ever strategic acquisition, where it will acquire a 100% stake in Unison Enviro for 562 crores. And a large block deal that took place in PB Fintech yesterday, where Temasek has made an exit by selling its remaining stake, and New World Fund and Small Cap World Fund are among the buyers. Back to you.
Okay, Hormaz, thanks a lot for wrapping all of that up for us and bringing us all of those stocks. Finally, Nigel is tracking all of the cues from the futures and options space. Nigel, good morning.
Well, morning. Good to see that the troika, or the trio, so to call it, is well behaved today. You have Brent crude prices that are lower. The dollar index has come down to around 103 odd. And the US 10-year yield, well, that came down to around 3.9%. So the troika is doing quite well, so which bodes well for us. What did the FIs do in the F&O market yesterday? They've done what they have been doing for the last few sessions. They added some mild long positions, and they covered some short positions, which brings their short positioning down to sub 70%. And at the start of the series, we made this point that if the FIs are net short, it may not be such a bad thing. And if you just pull up a graph, you'll see in the last few sessions, from a high of around 108,000 net short contracts, it's come down to sub that, to around that 80,000 short contracts. So that's telling you some bit of that short covering has played out, which means the long positioning has gone up. Some longs have been added in the system, and there is some mild short covering as well. What about the options data? Well, the 21,700 call as well as put, it's fairly active in trade. Even yesterday, it appears there's a bit of a strategy playing out, which is a short straddle. What is that? Well, you write the call as well as the put, and you pocket that premium. The premium, as we can see on the screen, if you just club both of them, is around 350 rupees odd, which gives you the short straddle range. What is that? 21,700 minus 350. 21,700 plus 350. And that's how you're getting that markup for you on the screen, which comes up, the broad range up for you on the screen. But the index this week really has been the Nifty Bank. And that's been a relative outperformer. We made this point a few sessions ago as well. It's showing some signs of outperformance. And for this week, it's been a bit of an outperformer, outperformed the Nifty as well. The big cue tomorrow is going to be the SBI results. So ahead of that, let's see how the Nifty Bank behaves. But otherwise, that's been doing quite well this week. Back to you.
All right, so let's see if that continues. Nigel, thanks a lot for taking us through all of those cues. With that, we need to head into our first short break. But on the other side, we are going to bring you excerpts from our conversations with the Finance and Revenue Secretary following the interim budget. Stay tuned. Welcome back. Let's now hear it straight from the budget makers. It is incorrect to say that the government is being conservative with the revenue estimates. That's the word coming in from Finance Secretary TV Somanathan. Speaking exclusively to CNBC TV 18, he said that the government is very close to achieving its revenue target. Listen in.
You said our estimates on collections, tax collections are realistic but slightly conservative. If you can highlight for us why you believe that you've decided to err on the conservative side, and how much room does that give you then for an upward revision?
No, I think I was reacting to a discussion I heard which suggested that we were being extremely conservative.
That's the consensus view, by the way.
Which is absolutely incorrect. So I actually think we will be very close to our estimates in terms of what revenues we will get. And the reason for this is I think people are misreading the non-congruence between the gross tax revenue and the net revenue to the center. The non-congruence has a very specific and factual reason. Gross tax revenue, we have shown it growing at 12.5%.
Yes.
This is the amalgam of all the taxes. including indirect taxes and including union excise duties. Among those taxes, many of them are growing. Some are growing at 14, some are growing substantially. But union excise duties, in our own estimates, I don't think anybody would contradict that, is likely to be down 5%.
Yeah.
So the item which is down 5% is a particular component which is not shareable with the states. So the entire 100% of the decline accrues to the center on that item. The increase on the other items is shareable with the states. Now, similarly, each tax has a composition in terms of tax, cess, surcharge, which results in a different combination of how much is shareable with states. The net effect of that combination, particularly with union excise going down and being almost fully shareable, if you look at another part of the same statement, the states' share, the devolution to the states is increasing by 16.5% against a tax revenue increase of 12.5%. Now, if the deduction is increasing 16.5%, the top line is increasing 12.5%, then the net doesn't increase at 12.5%. It increases only at 10.8%. And that is being interpreted as some conservatism which is undue.
All right, that is the word coming in from the finance secretary saying that they're not being conservative with the revenue estimates and the actual figure should be pretty close to what they have provided. But with that, let's also bring you another very important word. This comes in from the revenue secretary, Sanjay Malhotra, and he has said that the revenue from online gaming has multiplied 6 times since the 1st of October. In a conversation with Shireen, he clarified that companies will have to pay 28% GST going forward. Hear him out.
Well, you know, unlike last year where there were a couple of points of controversy, including, of course, what we saw happen as far as gaming was concerned and TCS this time around, nothing much to quibble about. But on both of those issues, and I know you clarified that there is no change as far as the TCS rate is concerned, it is basically legitimizing or just reaffirming the rate that was put out as far as the press release goes. But on gaming specifically, now the matter is sub judice. You know, where do things currently stand?
Let me first of all tell you, that the changes that were made for online gaming, of course this is not a budget issue, but since you have asked this, from 1st October, our revenues have multiplied to 6 times. 6 times. Over the 3 months, that revenues that we have got, they are averaging about 1,200 crore, vis-a-vis 200 crore per month revenues that we were getting.
And only from the online gaming platform?
Only from the online gaming platform. This does not include, the casinos, etc. So there was a huge potential which was there, which was untapped, and which we have been now able to tap. Insofar as the question as to whether, these changes were retrospective or prospective, of course, these changes were prospective. Retrospectively also, our belief was that the online games were liable to pay a 28% tax rate because these were actionable claims. Their claim is that these are not actionable claims, and so they are liable to pay 18% on what is called GGR. So that dispute is in the court. But going forward, there is no issue. All of them are paying 28%, and they are paying 28% on the actual value paid.
All right, that is the word coming in from the Revenue Secretary on the tax that they're getting from online gaming. But moving on now, like we were mentioning, Paytm is going to be in focus today as well because shares of Paytm actually hit a lower circuit in market as yesterday. This after the RBI imposed major restrictions on their payments bank. Paytm has said that this will result in an annual EBITDA hit of 300 to 500 crore rupees. The founder Vijay Shekhar Sharma called this action a big speed bump, but one that the bank will be able to navigate. Addressing the issue in an analyst call, Vijay Shekhar Sharma said that Paytm Payments Bank is taking immediate steps to comply and that 197 is already in works with other banks since Paytm Payments Bank was barred from onboarding of new customers in 2022 itself. When asked what exactly warranted this big action from the RBI, he simply said that there were no additional details that have been sent to the company by the RBI, apart from, what is already disclosed publicly. He also clarified that the company's marketing and financial business were not affected because of this. In fact, let's listen in to a little piece of that conference call.
Going forward, the keyword is that we will not work with Paytm Payment Bank, and that is what probably means that other banks will come. Paytm, I can say that it is more of a big speed bump, but it is something that we believe that with partnership of other banks and capabilities that we have already developed, we'll be able to see it through in next few days or quarters, as the case would be.
Okay, let's see how the stock moves in trade today. Like we mentioned, it was a 20% lower circuit on the stock yesterday. We'll get into a short break now, but we've been mentioning the big drop in crude prices overnight. So Manisha will fill us in with all of the action on the other side. Welcome back. You're still tuned into Power Breakfast. Let's now talk about the commodities and the kind of move that we've seen there. Manisha joins us. Manisha, good morning. We've been talking about the 2% drop in crude prices, but what really led to that?
Oh, well, yes, such a sharp one at that, and we are trading below $80 a barrel for the Brent crude prices now, Pavitra. One is the talks of ceasefire between Hamas and Gaza, and there is a lot of optimism around that, and that took all the premium away from the prices there. The second is that you had the OPEC and allies, the first meeting of this year happen, and they have maintained production cuts. Even as there have been demand concerns, markets were anticipating that OPEC might just go all out and cut production some more, but they haven't done that. Instead of that, you have a positive coming in from EIA, where they have increased the global demand estimates to 2 million barrels per day rather than 1.24, which was their estimates earlier. So you are looking at not happening anything from OPEC, the premium from the global war going off, and that is what is weighing onto the markets right now. The street will watch out for the interest rate trajectory going forward from here. So that's about the crude oil prices, but it wasn't just crude. There was a sharp decline that you saw in the base metal prices also. So between copper, aluminum, and zinc, it was 1 to 2.5% of a decline. The only thing that actually is trading in the positive is the precious metal prices. So gold and silver have seen some smart money move into them.
Okay, Manisha, thanks a lot for getting us that quick update on what's going on with some of these commodities. But with that, let's also move on and talk about the geopolitics in West Asia, which have been in focus. A BBC report now suggests that the United States has approved plans for a series of strikes on Iranian targets in Syria and Iraq. Remember, this comes after the United States blamed Iran-backed militants for a drone attack that killed 3 U.S. soldiers in Jordan, very close to the Syrian border. So that is an important update that we're tracking. We'll, of course, keep bringing you more on this through the day. But as we wind down on the show, let me bring you some updates from the world of sport as well. 7-time Formula One world champion Lewis Hamilton has announced a shock switch from Mercedes to rivals Ferrari for the 2025 season. The 39-year-old has driven for the Silver Arrow since 2013 and has won 6 world championships with the team, although they have been going through a bit of a dry patch for the last couple of seasons. After his move, by the way, the Ferrari stock price saw a big jump. It was up over 12%. So the street clearly likes the sound of this move. So with that, we're going to wind down in this edition of Power Breakfast with the news that all of the Asian markets are higher, and the GIFT Nifty also suggests a big gap up for the Indian markets. Thanks for tuning in. We have Bazaar Morning Call up into it.